Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn and Associates with your metals market update for this weekend edition on Friday, December 21st, 2018, winter solstice. Shortest day of the year, if I'm right. Now it starts getting better. Now we're headed into the Christmas holiday, so trade gets very different. You've got to remember that. For example, Monday's trade hours are abbreviated. Then you have the Tuesday, you have Christmas Day. You'll have probably electronic markets open on Tuesday night. Not necessarily the grain markets, but the metal markets will be open and some of the others. And then you've got to get yourself ready for what? The New Year's holiday. But what we do in this particular video is we look at the market on the bigger picture for the year. But before I go into one of them, I want to take the moment out to wish everybody a very Merry Christmas and a Happy New Year. You will have some videos from me out this coming week, so hope to see you in them, but it won't be the norm. It's that simple because of the holiday. What can we do? So the biggest thing going on has been the dollar, as you know, and it's strong again today and weighing on all the foreign currencies. I didn't think it would weigh that much on the euro and the Swissy today, but it did it. And that strength of the dollar is knocking back the metal markets, and of course look at the stock market. Now as I'm talking to you, which is about 2:25 in the afternoon on Friday, at this point it looks as though there's not going to be a Senate vote that passes in an affirmative way the funds for the border wall, and that the government's going to go into a phase of a shutdown in some departments. What I like is that they should call back all these senators that ran home, did whatever, get them on the floor and vote. Whether they're coming back or not, they were voted there this whole time. Do your job. I don't want to hear the rest of it. You know, we all have to do it. What do you do when your boss says, I want you here? I don't care if you're the boss. You got to set the mode for your people. So I think they're headed back in, and we'll see what happens there. When we look at the gold monthly chart for the very first time in months, the market is at least making a run towards, didn't hit it, but towards the 18-month moving average of closes at 1271.10. The picture to walk away with for 2018 is that this market stayed very much in a trading range that really has been in place since mid-2016. It tried the downside, couldn't get any traction, and it's pulled back to about mid-value. Big question for people this year will be, what does the dollar do for 2019? And if it's a market top in the dollar, what does that do for gold? If it's another year of strength, what does that do for the gold market? I think those are the questions that have to be answered. When we look at a weekly area chart of closes, there's no getting away that since 1178.80 or so, the market just keeps climbing to higher highs. It's in an up thrust. When we take this market from this high that was made at 1365.40, and we're coming way back, as you can see here earlier in the May time frame, drop down almost $200 an ounce to 1161.40. We've had our first bounce, and it's been a healthy one. You've gotten up to the 50% line. This red line here is the 38% line. Often markets stall a little bit here. If they're good, they try to make a run to the 62% correction line. But this market is acting good. You can't come away from it thinking different than that. And when you put on the swing lines, you can see you've got a pattern here of higher lows, higher highs. That's bullish. The market is over the 18-week average of closes, which I call the line in the sand, bullish. It's managed to play around this 200-day average, and now it's trying to lift itself back towards the 100, which comes in at 1266. So still very much a bullish pattern. Even if the market were to break back down here, you'd have to, I think you'd still find support in the 1217 area, that 18-week average. Now, what is the market doing at a resistance level? We can see the 100-day average could be a guide. We know that we just looked at the Fibonacci numbers, which are at the headed to the 50% level. So it's between this number, the 1255 level, the upper Bollinger Band, and the 100-day average, 1266.50, that the market's got a lot of resistance. It's trading against that upper Bollinger Band as we're talking. In terms of momentum, it's up. So on all the definitions I have, higher lows, higher highs, admittedly you're at resistance. Do I teach to buy over a Bollinger Band? You can be guaranteed I don't do that. So I'm not surprised to see some money coming out of the gold as of yesterday's rally, Thursday's, up there in the market to pull back a little bit. The first challenge of Bollinger Bands is very important. The gold-silver ratio has still not, on a weekly basis, turned in favor of the metal markets. I'm talking the base metals gaining against the gold. Yes, we've had a correction from 86.5 ounces of silver needed to get an ounce of gold to 85, but it's not done anything major. When we come to the GLD ETF, like the futures, you're up to the upper Bollinger Band. If it can extend, maybe we can get to this 120.24 level, the 100-week average, but I do think the pros are taking money off the table here. When we come to the gold miners, look at how this market took off. Got as high this week as 21.47, as you can see. Now, as we take a look at where prices are, it's pulled back to the upper Bollinger Band, and it is fighting its battle literally there. It's at 2033, 2066 is that number. So the Bollinger Band resistance gave people a shot, the first challenge of it, to take some money off the table, and they did a nice job. You wouldn't want to see this week's low taken out next week or the week after. If so, you could look back and call that a trap in the market, and if you took that out, it would not be a surprise to see prices make an attempt back to the 18-week average. It's often what occurs if you take out the low of an outside day up immediately. I'm talking the week after it occurs or the week after that. It's my own rule, but it's something that I look at. Does it work all the time? Guarantee nothing works all the time. I wish I knew one thing that worked every time. By the way, if it lost every time, that'd be worth a fortune, because then I could bet against it and I'd make all the money. As you can see here, in the silver, higher lows, higher highs. Very much though, take a look at your Bollinger Bands, caught in sideways action. This is really a market that is churning sideways more than anything else, but it is in an uptrend. It has upside bias and momentum is turned up. In the copper market, you are just caught in all this noise of this sideways action. Copper is most likely waiting for two events. Today we heard that the conference, the three-day conference that just ended in China, they are talking that they're going to do something in taxes and more stimulus for the economy in infrastructure. Well, copper really didn't respond very well today, so I don't know what that does. That leaves me the other end of the spectrum, where can China and the U.S. get really together in January and make progress on their talks, or is that just a dream and we're in what we're in? Copper is saying we're in what we're in temporarily. Platinum sinking down, still in a bear trend. Maybe it makes a run to the lower Bollinger Band. The strongest of the markets, which had a big size correction today on it on the daily charts, is the palladium. Is the market going to be able to make it to that upper Bollinger Band? Maybe not. It hit them back here. It doesn't have to, but it's still not showing weakening signs. It hasn't seen its momentum on the weekly chart turn down. And then you get to the dollar index, which fell down this week back to the 18-week average of closes. How often do you hear me say that to you? Look for support there. And now the market has bounced away from that almost a full cent. Momentum in this market is upward. Bias is up, but you're not trending. You're really just churning back and forth in this market. I want to remind you about my charting course special. Now let me explain this. For Christmas, right up to Christmas Day, you're able to buy my course at a substantial discount. It was $149.95. For Christmas, I've lowered the course to $99.95. After that, I'm going up to $169.95. So you really get a big advantage of picking it up if you want now. Now, how it works is it's videos. It's 6 hours of videos, 54 videos. See what I do, and then with the charting software, including the data I use in the videos, you're able to do the same thing that I did. Then, in the mornings, I record a tape where I walk you through what you've just learned and reinforce the learnings each day and show you what I'm seeing. How do you get all this and get involved in the research and all? It's all part of the course. You can either call my staff to work with you. And by the way, if you buy it now and you want to start at mid-January, just let us know. We'll work with you on that. If you want to, you can go to the website, and under the word education will be there. And you can always click up here if you're looking at this right now and you see an icon on YouTube, click it, it'll take you right to that page. I'm Ira Epstein. Merry Christmas, Happy New Year. See you shortly.